Imagine waking up one day and realizing your hard-earned savings have lost a significant chunk of their value overnight. With inflation rates soaring, this is becoming a harsh reality for many. But what if I told you there are smart, actionable steps you can take right now to protect and even grow your wealth in these uncertain times? Today, we're diving into one of the most pressing financial topics of the year: how to beat inflation with smart saving and investing tips. Inflation is at an all-time high, and it's more important than ever to future-proof your finances. Stick around because we'll provide actionable advice on how to protect and grow your wealth. Every dollar you own is worth less today than it was yesterday. That's the harsh reality of inflation. Prices are creeping up, savings accounts are barely keeping pace. And if you're not actively growing your money, you're falling behind. Imagine working hard, stashing away your cash, only to realize that next year, it won't buy you as much as it does today. But here's the good news: you don't have to sit back and watch your wealth shrink. In this video, we'll break down powerful strategies to not just keep up with inflation, but to beat it and make your money work for you. Let's start by understanding what inflation is and why it's such a big deal. Inflation is the rate at which the general level of prices for goods and services rises, eroding purchasing power. When inflation is high, every dollar you have buys fewer goods and services. This can be devastating for savers and investors who don't adjust their strategies accordingly. Now, let's talk about smart saving strategies to combat inflation. One of the simplest ways to start is by moving your money into a high-yield savings account. Traditional savings accounts offer interest rates of around 0.41% APY that are far below the inflation rate. High-yield accounts, on the other hand, can provide interest rates of up to 4.75% APY. While high-yield accounts may not always outpace inflation, they can significantly reduce the loss of purchasing power compared to traditional savings accounts. Consider investing in series or savings bonds. These bonds are designed to protect your money from inflation. They offer a fixed rate plus an inflation rate, which adjusts every 6 months based on changes in the Consumer Price Index, CPI. This makes them a great option for preserving the value of your savings. Certificates of deposits can be another good option, especially in a rising interest rate environment. Locking in a higher rate for a longer period can help you stay ahead of inflation, but be mindful of early withdrawal penalties. Saving alone won't protect your wealth from inflation. You need to invest strategically to grow your wealth. Historically, the stock market has outpaced inflation over the long term. Consider a diversified portfolio of stocks, focusing on companies with strong pricing power, meaning they can increase prices without losing customers. Sectors like technology, healthcare, and consumer staples tend to perform well during inflationary periods. Real estate is another excellent hedge against inflation. Property values and rental incomes tend to rise with inflation. Consider investing in real estate investment trusts or REITs if you don't want to deal with the hassles of owning physical property. REITs are companies that own, operate, or finance income-producing real estate and often pay attractive dividends. Commodities like gold, silver, and oil often perform well during inflationary periods. They have intrinsic value and tend to appreciate when the value of money declines. You can invest in commodities directly or through exchange-traded funds, ETFs, that track commodity prices. Treasury inflation-protected securities, or TIPS, are government bonds specifically designed to protect against inflation. The principal value of TIPS increases with inflation, and they pay interest twice a year. This makes them a very secure investment to hedge against inflation. Diversification is key to managing risk and protecting your investments from inflation. Spread your investments across different asset classes, such as stocks, bonds, real estate, and commodities. This reduces the risk of any one investment performing poorly. Consider diversifying internationally. Inflation rates and economic conditions vary across countries. Investing in foreign markets can provide exposure to economies with lower inflation rates and higher growth potential. For those nearing or in retirement, inflation can be particularly damaging. Consider strategies like holding a mix of stocks and bonds, including TIPS, and maintaining a portion of your portfolio in income-generating assets like REITs and dividend-paying stocks. Finally, let's talk about future-proofing your finances. Regularly reviewing and adjusting your portfolio ensures that your investments remain aligned with your financial goals and the economic environment. Inflation and economic conditions change over time. Increasing your income is another effective way to beat inflation. This could be through advancing your career, starting a side hustle, or investing in skills that enhance your earning potential. High-interest debt can be particularly burdensome during inflationary periods. Focus on paying down high-interest debt to free up more money for saving and investing. Stay informed about economic trends and continue educating yourself about personal finance and investing. Knowledge is power, and staying ahead of the curve can help you make better financial decisions. Beating inflation requires a proactive and strategic approach to saving and investing. By implementing these smart saving and investing tips, you can protect and grow your wealth in an inflationary environment and future-proof your finances for 2025 and beyond. Remember, the key is to stay informed, diversified, and adaptable. If you found this video helpful, don't forget to give it a thumbs up, share it with your friends, and subscribe to Fortune Roadmap for more personal finance tips and advice. Thanks for watching, and see you in the next video.